More on U.S. China relations. I'm joined from Washington by James Sasser. From 1995 through 99, he served as U.S. ambassador to China. He's currently senior advisor for APCO Worldwide, one of the largest independently owned communications consulting firms in the world. Mr. Ambassador, welcome back to Bottom Line. Always a pleasure to have you on.
Thank you. Pleased to be here.
Sir, in a Bloomberg View editorial, our editors wrote, quoting here, President Barack Obama and the presumptive Republican nominee Mitt Romney both act as if lecturing China about its undervalued currency is a good way to show they care about U.S. jobs. When Treasury Secretary Geithner and Secretary of State Clinton arrive in Beijing next week, will they and should they hold off on lecturing the Chinese?
I don't think you'll see a lot of lecturing coming from either the Secretary of State or the Secretary of the Treasury. This is the fourth annual meeting of the so-called strategic and economic talks between the two countries. Both China and the United States are in what are ostensibly election years. We have an election here in the United States, and the Chinese are selecting a new president in China. So I don't think there'll be any lecturing. I think they'll simply try to maintain the status quo and harmony for the rest of this year.
Well, sir, as you well know, Beijing takes action when it's ready to do so, and not because it's prompted from or receiving criticism by another government, especially the U.S. If Washington holds its tongue, is that any assurance that the Chinese will act sooner rather than later to address issues such as moving on the yuan or shifting its economy to consumer-led growth?
Well, I think the Chinese are moving in the direction of consumer-led growth. And I expect the Secretary of the Treasury, Mr. Geithner, to urge them to move faster in that direction. The Chinese themselves have seen with the recession in the West, both the United States and Europe, their exports decline. And they do not want to be overly dependent on exports. So they're moving, I think, as rapidly as they think they can in the direction of a domestic demand economy.
Mr. Ambassador, what effect does China's exchange rate policy have on global financial and economic stability?
Well, I think, as the Secretary of the Treasury said, the Chinese currency has been rising fairly significantly against the dollar over the past few years. But it's still undervalued, and the undervalued currency, I think, places Chinese exports at an advantage as opposed to a disadvantage on Western products, particularly U.S. products moving in the world market and to China.
Well, what type of fallout do you think would occur if the United States, as Mitt Romney has advocated, declares China a currency manipulator?
I think that would be an absolute disaster. I mean, we have worked diligently now through Republican and Democratic administrations to develop a mutually productive relationship with China, particularly on the economic front. And to unilaterally declare China to be a currency manipulator when their currency has been rising against the dollar, I think would be a most unwise gesture on the part of the United States.
Sir, last quarter, China's economy expanded at the slowest pace in almost 3 years. How much pressure is there on Premier Wen Jiabao to ease monetary policy?
Well, the Chinese have had a fairly easy monetary policy. At the time of the sort of world recession, China engaged in a really terrific stimulative program. They had a stimulus of about 586 billion U.S. dollars. Translated that, when you lay that beside the size of their economy, that would be like the United States having a stimulus of well over $1 trillion, maybe $1.5 trillion. Right. So the Chinese have moved, I think, rapidly and pretty strongly in trying to continue their economic growth. It's falling off somewhat,
yeah.
But this is now a mature economy and cannot be expected to continue to grow in double digits.
Sir, we have about a minute left. Since the mid-90s, China's growth rate was near double digits, and now China's economy appears to be decelerating. What would that mean for the global economy, particularly the United States? We should mention, as also a former U.S. ambassador to China, you're also a former United States senator from Tennessee. What would that mean, say, in communities in Tennessee?
Well, I think that as the Chinese growth rate declines, I think you will see the U.S. economy moving ahead even stronger. As the Chinese growth rate declines, then the U.S. economy once again will be the major contributor to the world's GDP and GNP. And I think that that would mean a boost, frankly, for U.S. exports.
James Sasser, the former U.S. ambassador to China, currently senior advisor for APCO Worldwide, joining us from Washington. Mr. Ambassador, it's always a pleasure to have you on. Thanks for your perspective.
Thanks very much.
Thank you, sir.